The uranium market is beginning to really heat itself up, and all the evidence is pointing that this could end up even being bigger than the record-setting rally during the last uranium market, one in which Rick Rule has famously stated that his worst performing stock returned him 20x, not 20%, but 20x. And here to discuss this topic, we have Justin from Uranium Insider. Now, this is getting very, very, very hot in the market, and there's some amazing opportunities because there's quite simply not very many uranium stocks out there right now. And this is an opportunity for retail investors like us to actually beat a lot of this big money to the market. Uranium Insider is the best uranium newsletter. I am a member of it, and it breaks down the market, what's going on, the bullish cases, trending updates, and most importantly, some of the best stocks. The link to that is right there down below in the description, and I pinned it to the comments right there down below. I am a member of Uranium Insider, and I'm very excited about the potential of this market. As you know, if you're a regular here on the channel, I highly encourage you to go to Uranium Insider, link right there down below in the description, and I pinned it as the top comment where you go ahead and sign up to that. Now, today we're going to be breaking down some of the most breaking news updates that are happening in the uranium market. This video is sponsored by Vizsla Silver. So if you're looking for a silver stock, be sure to check out Vizsla Silver. Make sure you hit the like button on this side or this side. Send this video out to more people. Let's create a movement where we all beat the big money to the uranium market and we have some fantastic returns. So give us your uranium price prediction in the comments right there down below. It's starting to move up. Welcome, Justin.
Good to see you, Jake.
Sometimes I get out of breath after my intros, but so far so good.
That was great.
I'm getting out of breath looking at these at all these uranium data. I mean, it's looking so incredibly bullish. And today's obviously a fantastic day. We've seen the dollar kind of correct lower a little bit. Uranium's moving up, and there's been a lot of bullish news. Give us a start. We've seen so many companies going into the spot market and buying the uranium ahead of the utility companies. And so give us an update. What's going on there for someone who's unaware?
Sure. Yeah. In the past few weeks, we've seen some really interesting developments in the realm of physical purchasing, physical uranium purchases. So traditionally, uranium is purchased primarily by utilities, secondarily by traders that are fulfilling smaller orders for utilities and or trading pounds back and forth with each other, kind of arbitrage on minor price movements within the spot market. And we have the physical uranium funds, Yellow Cake that's on the London Stock Exchange, and Uranium Participation Corp on the TSX. And these two funds hold physical uranium, U3O8, and Uranium Participation holds a bit of UF6 as well, converted uranium. And those are the traditional buyers of uranium. And well, I guess in the past couple of years since Cameco closed McArthur River, they've been also buying. So that's a producing company buying physical uranium to fulfill their own long-term contracts that they already have on their books. By the way, many of those fall off in the next year or so. So Cameco really has to get the utilities to step up to the plate and sign some new contracts in order for them to even consider bringing McArthur River back online. That was just kind of a side note there. But so Cameco being a producer buying physical, that was kind of a new development into the space. And that had sort of a doubling effect when they closed their mine. It was pounds not coming into the market, but then they were also consuming pounds from the market at the same time. So with 18 million pounds offline, it's not just an 18 million pound deficit created by that. It's a 36 million pound deficit, or not necessarily deficit, but it has a 36 million pound effect on the market every year that mine is closed. But what happened a few weeks ago was that Denison Mines, which is not a producing uranium company, they're based in the Athabasca Basin in Saskatchewan. They announced that they'd be raising $75 million to purchase 2.5 million pounds of U3O8 at $30 a pound, roughly. They actually just announced today that they secured that purchase. They secured those pounds in the market that will be delivered between April and I think it was September or October of this year. So Denison came in as a non-producing company, announced they were purchasing physical uranium. This was a huge, huge development for the space because it's kind of, there's a new buyer in town. And it also opens up this whole other question, which is who else is going to be coming into the space to do this? Well, later that day, Uranium Energy, UEC, announced that they would also be buying physical, 1.2 million pounds. So now we have two companies. And then the third came out the following week, which was Boss Resources, also buying physical. So now we have three non-producing uranium mining companies buying physical uranium from the spot market. It's a very interesting development, and it really should be getting the attention of the utilities at this point. And upon Denison's announcement that they'd be buying 2.5 million pounds at $30 a pound, they actually secured it for a bit less than $30 a pound, but the spot price immediately reacted from the mid 27s a pound, jumped right up. I think it's about $31 a pound right now. So it made, you know, a pretty significant, almost 15% jump in the past couple of weeks. That's kind of the big development in the physical uranium world. Yeah.
Athabascan Basin is kind of like Sally sells seashores by the seashore for adults.
It is. Yeah. It always trips me up. Athabasca.
So why don't you show us the first chart here so people really grasp the impact and what's going on here. And then my next question to that is, as we see all these companies stepping in, do we know how much is left on the spot? And is this a precursor for funds such as you coming in now, or just hedge funds coming in now? What's the effect on that?
Yeah, that's a good question. I mean, I think that we're all sort of waiting for the hedge funds to kind of make themselves seen in the space, besides the positioning in the equities, which is clearly done well for retail investors who've been positioning. There's a lot of money coming into the space here. I'll bring that slide up and we can take a look at that. But yeah, I think I honestly do think this is one of the steps towards moving to that point of hedge funds buying physical and squeezing the market even further. Perhaps the players that we're talking about now know that there's still a little bit kind of circling around in the spot market, and that's getting swept up. And there's always, you know, there's consistent producers that sell into the spot market. So it's not like there's this static supply that once we hit this point, there's literally nothing left, and will be nothing left. You know, there are suppliers that are selling into the spot market, and there always will be, you know, and we expect, you know, as the prices rise, that there's going to be pounds coming out of other places. Probably not, you know, market killing amount of pounds, but, you know, something's at $30 a pound, you're holding inventory that you spent $55 a pound for. Well, maybe when the price hits 60, that, you know, you might want to get it off your books. They've been holding it for 10 years. Who knows? But so yeah, the producers that are selling into the spot market, it's not huge volumes, right? You've got BHP's Olympic Dam in Australia with uranium as a byproduct of copper production primarily. You know, they're about 8 million pounds a year, and much of that goes into the spot market. Uzbekistan sells both directly into the spot market as well as offtake agreements with traders such as Itochu out of Japan. They sell into the spot market from their offtakes from Uzbekistan.
Got it.
You have Uranium One that's producing in Kazakhstan, and you know they produce pretty cheaply. They're consistent spot market sellers, but it's not a huge amount, you know, 4 or 5 million pounds a year or something like that.
Maybe the Clinton Foundation could step in and buy some more of it.
That'd be nice. Yeah. Yeah.
Just
wanted to give us a favor.
All right. So show me this.
Yeah.
Show me this first one here.
Here we go. Let's see. All right. Can you see that? All right.
Yep.
Okay. So this is actually leaving off the Boss, the Boss Energy purchase as well, which I think it was less than 1 million pounds, but it was still something. I don't recall exactly how much it was. So, because Adamprom, we believe they're going to be coming into the market for something approximating 4 million pounds. Okay. Could be a little bit less, could be a little bit more.
This year in 2021?
Yes.
Okay.
So they're guiding, when they came out in March with their 2020 numbers. They did some guidance for the year. They're guiding for a normal production year, but we think that basically what they're planning for is substantially increased well field development happening essentially now, and when they did finally get back into the game after the COVID closures for 4 months last year. So absolutely, the production is being impacted right now and probably for another quarter. And I think that they're betting on having increased production towards the end of the year to kind of balance out the year. But they're selling 3.5 million pounds to Yellowcake, and they're likely to see, like I just mentioned, supply impacts over the next few months, at least in the Q1, Q2, before that well field development following the COVID closures actually kicks into gear and is produced, because it takes time to drill out those well fields, establish the well fields, and acidify the well fields before that production actually starts to happen. So we think they're going to come into the spot market. They've said as much. They're not saying levels, but they say, their language is more like, it's possible that we might need to do a bit of purchasing, things like that. Mm-hmm. So that's one. Yellowcake, like I said, they executed their 2021 option with Adamprom to buy 3.5 million pounds. They raised an additional 30 million on top of that raise, just because the money was really flowing at the moment, I suppose, to buy another 1 million pounds. That would not be coming from Adamprom. That's going to be coming from the spot market, we think. They've already secured about half of that. As I mentioned, Denison, 2.5 million pounds. They secured that for 29 something. It was just under $30 a pound. And UEC at 1.2 million pounds. Now, everybody is waiting to hear from Uranium Participation Corp, because they've been trading, the stock has been trading at a premium to NAV for about 6 weeks now. And, typically what the market would expect to happen is when the stock is at a premium to NAV, they can issue shares that's non-dilutive or less dilutive to shareholders at a premium to the actual valuation of the physical uranium they're currently holding. And so they would issue shares, raise the cash, buy some spot market pounds. And we are still waiting to hear from that. And I believe it's going to happen, and primarily because there's no doubt that there's been funds positioning in many of the equities, especially the mid to large caps. I believe funds have positioned into UPC, and they're probably turning the screws to management as we speak. And it's likely that UPC is going to come into the market as well. So we're looking at, what is this, 12.2 million pounds plus bosses, let's call it 13 million pounds, not even including.
And what about URC? Got about 400,000 pounds.
That's correct. That's another
yesterday.
one.
So that's another 400 or so.
It's another one. Yeah. So we'll put that a bit over 13, but let's not count Adamprom even here, because that's not a guarantee. This is just kind of our speculation here. So we're pushing, let's say, 9 million pounds of physical purchasing by the entities here, including Boss, including URC, excluding Adamprom. That's not even including Cameco's purchasing. So Cameco needs to purchase around 8 to 10 million pounds a year this year. Okay. And that includes their Inkai production, which on their books looks like purchases. That's around 4 million pounds a year. So let's call that 4 to 6 million pounds for Cameco, plus whatever is not being produced by Cigar. So Cigar is 18 million pounds a year. Half of that goes to Cameco. That's 9 million pounds. It's already off 3 months. Actually, we're pushing 3.5 months, or even closer to 4. And we think it's going to be at least another 2 months. So we can conservatively say 6 months of Cigar offline. That's 4.5 million pounds. So now we're looking at 8.5 to 10.5 million that Cameco will need from the spot market. So that doesn't include Inkai purchasing, which is in addition to that. So all told, if we look at Cameco's needs for the year, now we're up to we're almost at 20 million pounds from the spot market. It's quite wild. And this doesn't include traders. This doesn't include any sort of carry trade purchasing. And this doesn't include utilities stepping into the market as well. Or hedge funds. So it's really quite the situation here in the spot market. And yeah, we believe that the spot market is thin, but like I said, there is pounds that consistently come in that this sort of volume that we're talking about can clean up without putting huge moves on the price. but it's only a matter of time before the funds and or utilities actually, step up and participate in all of this as well.
So is there any type of an estimation one would have on how much Uranium Participation Corp could purchase based off of their NAV and such?
I think a raise of around 100 million is reasonable, which, I think that they could do, let's say 3 to 4 million pounds, I think is something along the lines of yellow cake would be something that I would expect.
Wow. Yeah, that starts to, when you break it down like this and you see them all in front, it starts to get pretty interesting. Do
Yeah.
you think we could have that price squeeze this? I know you said before you thought maybe the following year might be the year of fireworks, but this was before any of this, this has all transpired very quickly.
Mm-hmm.
How has this data we're looking at here changed your opinion on the impacts it could have on the spot this year?
Well, I think we're already seeing the impacts it's having on the spot market. We've seen a 15% jump in price in 2 weeks. Obviously, the more pounds that are purchased from the spot market by non-utility entities, the less is available for utilities when they decide to come into the market. Again, I think that really the key in this thing moving substantially is going to be either the utilities or the hedge funds or both. I think that it's possible that happens this year. I'm not betting on it, nor do I really care if it happens this year. In fact, if it doesn't happen this year, I think that next year will be more explosive. But I certainly think that it's possible that the funds could come in this year. It all really depends on how many more funds are going to hear about this story and position prior to the funds, let's say, unilaterally and collectively deciding that it's time to come in and step in and start scooping up pounds of physical. So that hasn't happened yet. And positioning, the equities still, I guess you could say, they're relatively cheap when we're talking about where this market could go, previous market valuations, et cetera, et cetera. There's still a huge opportunity for retail and for institutions to come in and position prior to what is really what we're waiting for, which is a squeeze on the spot market and utilities actually signing long-term contracts, which is the ultimate kind of thing that we're expecting to really move the market and really be a sign that, okay, we're there and it's on, and buckle up.
We should do a GoFundMe campaign and raise 75 million and go buy a couple more million pounds. What do you think?
Not a bad idea.
So, we're talking about so much more money still to enter this space. And you were showing me a very interesting chart on, I called it a parabolic move on the money flow into the sector.
Yep.
Now, this is just nuts on this move up. So tell me what we're seeing here.
So this chart is from a gentleman named Grant Chalmers on Twitter. So credit to him. He puts together really excellent graphs, primarily on commodities, resource investing, financial type graphs and charts. And definitely, if you're on Twitter, I recommend following him. So this is just showing the 50-day moving average of money flow into the uranium space and going back about 15 years here. So we can actually see the bull market going from 2004 to 2007, the types of moves that had. And keep in mind, that's the spot price going from, $8 or $10. Well, I guess it was a bit higher in 2004, but let's just say 10, maybe 15 at the most during that time frame, to $134 in 2007.
Wow.
So the spot, and it was just week over week over week of the spot price just marching up with very few exceptions. It idled out a bit in 2006. You can see how that money flow dropped. We had some dips, 2005 and 2006, but it was just an absolute march. And so you can see the number of funds that came into the space at that point relative to what's happening now is astonishing. So just looking, you can see it start, that's December. That's, late 2020, that's December, that low point there right before the parabolic move. So if we look at let's take a look at that, and we'll go to this next graph here, or this next kind of numeration here, where I can't see my mouse here. Sorry about that.
No worries.
Boom. Trying to get this figured out here. There we go. All right. So this is just kind of an example of the money flow into the space, and this is only one aspect of the money flow. We're looking at the AUM, the assets under management for the ETFs. So you have the Global X Uranium ETF, URA. This is the biggest ETF in the space. It's also still only 70% allocated to uranium, but it's the most liquid. It's the largest cap ETF. So it's the one that gets the most institutional money flowing into it. We're looking at less than 3 months here. Almost $300 million into URA.
Wow.
We have 150 million into URNM, and we've got, about 8 million into the little one, into HURA. So that is, what is that? 150, 300, that's almost $500 million in 10 weeks into the ETFs only. What's astonishing with this is that we saw huge raises happen too. I mean, look at the raise that Yellowcake did. NextGen raised 150 million. Denison raised 75 million. If you add up all the raises that the equities have done on top of just the funds flowing directly into the ETFs, we're pushing $1 billion in less than 3 months that have come into the uranium space. It's really a great sign for the sector. And to me, it's undeniable evidence that smart money has finally taken notice of this sector. This is what contrarian investors like myself that have been long suffering in the uranium space, we've been waiting for this moment for years. And this, what you're looking at right now, is evidence of that, in my opinion, or especially this last slide. There you go. And it goes to show you also, it's not, so you could say these equities are overheated. Retail is going after this thing when spot is barely moving. This is going to end badly. It's like, no, that isn't what's happening. Look at the ETFs. Look at the capital raises. This is real institutional money coming into the space. And these are people that don't lose money. Okay. This is smart money. This is not a frenzy of retail chasing a trend. And to me, what this evidences is the vast amount of capital that's now available in the world, and in the investing world especially, that is now looking very closely at commodities, at ESG plays, at energy, this rotation out of growth and into value. It's all kind of coalescing. And this, to me, is evidence of a market that's going to be going way, way, way higher than the previous market, even if the spot market doesn't do the same type of trajectory, which it very well could. So that's kind of what I'm seeing with this, and it's quite exciting.
So first of all, if you're listening to this and you find this valuable, we spent a lot of time putting this together properly and to really illustrate the incredible case that this makes to try to help as many people as possible. So if you're like, wow, this is amazing, please make sure, first of all, that you hit the like button just to send this out to more people. Comment down below, thanks, Justin, right there down below. Comment down, thanks, Justin, or comment down below, Uranium Insider. And especially make sure that you go and check out the Uranium Insider newsletter. I put the link pinned to the comments in the description. I'm a member, and I really couldn't be more excited. And, I've started doing a lot of uranium videos. And the reason that I have is because this just looks like an opportunity worth having some skin in the game. And Justin's got the best newsletter to help with the stocks in the market. So it's in the description and comments right there down below. Now, going back to what you were showing there, Justin, I didn't realize on the money flow chart where it was going straight parabolic, that was when the fairy tale during the last bull market where, Rick says, he had stocks that went up 100x, his worst did 20x, and everyone says it was so incredible. Many people, Peter Grandich, Doug Casey, many of them has said it was the most, bullish thing that's ever happened in their careers out of anything they'd invested in. But that money flow was saying we're already have more money in the sector flowing in than we did all the way back then, and the spot still hasn't even moved like significantly.
Yeah, exactly. That's how much more money is flowing just in the markets in general right now.
Wow.
Than back then. It's exponential. Yeah.
And that's why you've suggested that you think even if spot doesn't go to 140, which I don't know, when you show me that, and then you consider all the funds out there, so the fact that they have access to so much capital, you may see more people getting involved over time to drive the spot up to some ludicrous price because of the amount of money available. But this is why you've suggested that you believe, nonetheless, that the equities will far outperform. I know last time we discussed, you gave me just your personal opinion on where market cap can go versus where it was during the last market. Could you break that down for us?
Yeah, sure. So the previous market topped out at about 150 billion for the publicly traded uranium companies. And we're at about 25 billion right now. The interesting thing, though, is that there were so many companies that collectively created that market cap. Right now, we've got 60, 65 companies. And at the peak, I think there were more than 400 or 500, something like that. I don't know exactly, but it's in that range. So it's not like, okay, we're at 25 now. That means that all the stocks in the space are going to 6x. That basically means that if, to reach that same valuation, because we will see more companies coming into the space. That's definitely happening. But what I do believe is that I think the total market cap for the sector could be double that, or if not more. I think we could be into the multiple hundreds of billions valuation at that point, especially just seeing the money flow that's happening right now before we've even really begun kind of the real bona fide bull market for U308. It's bullish as in we're not at the bottom, and we continue this uptrend from 2016, the lows in 2016 for the spot market. So, and all of the other aspects of the fuel cycle are all moving up as well. Conversion in UF6 and enrichment, SWU, all of the other aspects are increasing. So it's clear to us that the bull market is on, but it's not necessarily clear to retail investors who are watching the spot market that the real fireworks have started, and they haven't. I mean, you saw that money flow. It's unbelievable, but this is the second inning. That's it. This is the second inning of a 9-inning game, and the fireworks don't really happen until like 7th or 8th inning, and we have a long ways to go. And even though we've had some good moves already, it's still already, it's the beginning. Yeah.
Yeah, man, it's incredible. And it's possible that we could even, one time somebody said, when I asked them about what inning we were in the silver market, they said that we aren't even in, the game hasn't even started yet. We just finished the national anthem. And I thought that was really funny. I never heard someone say that. It is possible that that's where we are in uranium if more funds get involved this time in the spot to make the spot, instead of go to 140 with the amount of liquidity in the world and inflation. Who knows? I mean, it wouldn't surprise me if it went to 200, 300, 500, if everyone's chasing returns, inflation's hot, and funds just go nuts on it. I mean, it's possible there could be some very big black swans that that are so crazy. That's why I want to, if you're unaware of this market and you just look at the spot, you're missing, I think, an incredible opportunity. And that's why, I'm really happy to have you on regularly so we can really, show people what's out there. But in addition to that, there's also been some bullish news with regards to Governments discussing it now. We've had the Biden administration talking infrastructure and such. There's even money allocated to nuclear. Give us a little summary on some of that other types of trending news, if you've been following it with the Biden administration, and if not, just an overall view on the sentiment from government perspectives.
Yeah, I think honestly, the biggest piece of news in that realm was last week. News came out of the EU that that nuclear would qualify as green energy. It's unbelievably huge to see that type of decision come out of a very large nuclear market, particularly in France. But it's huge news to see that happen, as well as the Democrats and the states supporting nuclear. It's what we're witnessing is a sea change in sentiment around nuclear. And it's something that we've been seeing for years as being very logical, because anybody that spends a little bit of time really actually giving an honest look at nuclear can recognize its benefits and its faults. And its faults are far overstated and its benefits are far understated. And finally, that's coming around into the mainstream and into governments. So I think what it really means is that the growth that we project through things like the WNA fuel report, which we should have an updated one later this year, which we're all looking forward to.
Is this the United States government report? Is that what that is?
Oh, no, this is the World Nuclear Association does a fuel report every 2 years. And the last one was in 2019, the fall of 2019. Okay. And they look at, so when you see those supply demand models that show a base case, a reference case, an upper case, that's the WNA fuel report. And they dig deeply into which reactors are planned to shut down, which are likely to get life extensions. They look at the supply that's currently online, when it will be diminishing, current mines, when they'll come offline, what new mines are coming online, how much supply is that going to be, et cetera, et cetera. They do a very, very thorough dig into the sector. Brandon Monroe for Bannerman Resources is involved in that fuel report as well. I think that he was on the supply side part of it, if I recall correctly. But anyways, so these different cases. So let's just take the upper case scenario. It looks like this. It's like, here's supply and here's demand, and it looks like an alligator mouth going out to 2040, with that supply demand disjunct starting kind of nowish. It makes certain assumptions for that scenario to play out, and those assumptions have to do with nuclear reactors getting life extensions or not. So we just saw in France, this was news from last month, but it still is relevant to this point. In France, every 10 years, they review their reactors and decide whether or not they're going to continue them on. And so they just recently made the decision in 2020 that in 2025, they would extend a further 10 years to 2035. This is 30 something reactors in France. It's 75% of, this is EDF's reactors, so it's not all of it, but it's most of the nuclear energy in France now just has a 10-year life extension. So all of these developments for governments that we're seeing that are at the very least accepting of existing plants, it means a lot to the future demand scenario for the sector. And it takes a lot of the fear about plants shutting down, kind of overwhelming the plants that are being built in terms of demand. So that's a big catalyst. It's a really big catalyst for the sector to see sentiment growing so positively, and to see life extensions being supported in countries that at least had the plants not necessarily on the chopping block, but we're not necessarily bullish on uranium, on nuclear energy. And that going forward, they recognize how its importance for carbon-free energy baseload.
So tell me what the ramifications are, or the significance of the EU labeling nuclear as green energy. What are the ramifications, or what is the significance of this?
It could be fantastic on many levels. The significance from a government level means that reactors that are currently operating are more likely to get life extensions and not shut down at their original planned shutdown dates. That's kind of one part. Part B, let's say it's more likely that we could actually see government funding and subsidies from countries that have reactors in support of life extensions or in developing of new reactors. Countries that don't currently have nuclear energy might be more interested in developing it for themselves. And from an investment standpoint, it means that nuclear is being accepted into the ESG fund, into the ESG investing case or category, let's call it. And I don't have the numbers right in front of me. There was a Bloomberg article, I think it was in February, that was discussing ESG funds, that they could be, ESG could represent, what was it, $50 trillion, I believe, by 2025. And so all we have to think about is nuclear getting a small percentage of that allocation to see massive moves in the sector.
And that ESG money qualifies now because it's been labeled as green energy. And the point of the ESGs is some stupid amount of money that they have, but it's only allowed to be invested in things that are labeled green energy. So now that opens up to, maybe that type of ridiculous black swan type of event that I said earlier that may even bring the market, and black swan in a good way, bringing it up even higher, right? That's kind of what that means.
For sure, yeah. And if a fund that has money allocated to ESG can all of a sudden now buy nuclear where previously they could not, or buy uranium equities where previously they could not. They're obviously going to be looking at the sector for its bullish future, but it's also just a matter of having that allocation. It's not necessarily indiscriminate buying like you'll see in an ETF. When funds come into the ETF just buys their underlying holdings at whatever price. They just hit the ask. So it's not exactly like that, but it sort of is. It's money that has to be allocated to this category. And if nuclear and uranium gets part of that, and I believe that it's already starting to happen, that's a big, big bonus for the equities.
Now, you were saying a moment ago that one of the other benefits of this is that governments getting involved, essentially. Now, before this occurred, you've had people that were unsure. I would guess people that you would ordinarily say, hey, I'm investing in uranium, and they're like, it's pointless or whatever. This opens up that door. And I've always said, when people make the argument, well, a lot of people aren't open to nuclear. And I've, after studying, a lot from people like you, that it seems like the governments label it as that, but the mass population is just really far behind the curve and they don't get it yet. But it's very clear the governments are. Now, as we're entering this terrible economic climate that we're in, where globally hundreds of millions of people have been moved back into poverty from lockdowns, currency devaluation and money printing is basically the only game left in town. And when you say governments getting involved, what's the over under true false on if governments are just going, we saw Biden say $4 trillion infrastructure every year or two, no matter who's president. We're going to be seeing ridiculous infrastructure bills probably for this whole decade. What's a possibility then that money, if it's about making jobs, building infrastructure over the next decade towards renewables or green energy, what is the probability that there's a very healthy allocation to that?
I'd say it's a high probability, especially in terms of what they're referring to as advanced nuclear now, which is getting a lot of traction, especially in the States and in Canada, which is small modular reactors. I think that has huge potential for government funding to go into new energy projects, such as investing in small modular reactors and advanced nuclear. So yeah, I think it's highly, highly likely that stimulus money going into infrastructure spending, not only in the States, but in many countries around the world, could see some of that go towards nuclear for sure.
Man, couldn't be more exciting, couldn't be more interesting of a topic, first of all, and purely exciting from the financial potential of front running a lot of this money that will be moving into the equities. And so I appreciate you coming on and discussing this topic with us. I have one final question, but if you're still watching this video, please make sure, if you haven't yet, you hit the like button on either side that you see it. It's one way you can support the channel. Make sure that this is reaching more and more people. Give us a comment down below that says Uranium Insider. Maybe there's a question I missed. We're going to start having Justin back on more regularly to kind of be our analyst and our updater on really what's happening in this uranium market. And if that sounds good to you, let me know in the comments that you'd like to see more certain topics or questions that you'd like me to ask. In a similar way that we have Steve from Silver Chartist on, we're going to start having Justin on more often so we can educate as much as possible on this uranium market. So let us know in the comments. If you didn't yet, Uranium Insider link to the newsletter is in the description, and it's pinned to the comments right there down below. Now, final question, give us some advice on investor psychology, Justin. You said that you were in the worst of times as well. You've experienced a lot of volatility. You've done an incredible amount of research, and natural resources and commodities in general are very volatile. So give us some final advice on the psychology and some of the important things that you've learned investing in this market.
Buy our newsletter.
Yeah.
No, really though. I mean, I would say the best advice really is to do what you can to understand the sector as much as you can, because only having an understanding of what the hell is going on behind the curtain gives you the confidence to stomach the drawdowns and to buy on the drawdowns. For example, yesterday, a couple of our holdings had big down days because URNM did a quarter end rebalancing, and they were just slamming it all the way to the bell, just knocking it down. A couple of them, there were actually numerous stocks, a couple of them we were holding, and I didn't even care. It was really interesting. I did because I was buying. So, but I wasn't stressed out about it at all. And I just kind of recognized that it has a lot to do with the fact that I watched that type of action for 3 years. And not only did that experience of seeing red on the screen, 4 days out of 5 for 2+ years, give me the stomach to be able to handle those drawdowns, but also the fortitude to be purchasing because I understand what's going on and I have confidence in the thesis. And then I would say second is to really, again, what we do with the newsletter is what I think that any retail investor should do, which is either just buy the ETF, or you have to do some work to figure out where you can generate alpha in the space, because clearly the equities have performed very, very differently. I was looking at a performance chart on most of the equities in the sector yesterday, just looking at 3-year performance. And one of our top holdings is up over 2,000% in 3 years. Jeez. And that's from the low, from literally a point in time 3 years ago to now. And there are some that have returned, there is actually some that are in the negative on a 3-year timeline. And the rest are anywhere between, 5, 10 to 50% for the bulk of them, couple up to 100%. There's a handful that are in the hundreds of percent over 3 years. And there's a few that are just shining stars. And, everybody wants to beat the market. So that's what we try to do with the newsletter. And I think we do a good job of it. We're up 281% since inception, whereas compared to URA is up 79%, wow. Just the ETF. So outperformance of the market is what everybody should be looking for. And there are still gems out there. There are undervalued stocks out there that I believe have a lot more potential than just kind of the shotgun approach, just shooting, your funds at kind of anything in the space and hoping you hit some winners. But There's also nothing wrong with buying the ETF if you believe in the thesis and not wanting to do the work in there. But yeah, the more you know, ding, 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 ding. The more you know about the space, the more confidence you can have to hang on during drawdowns and tough times, because there will be pullbacks. As bullish as I am, I fully expect 20, 30, 40+% pullbacks in the next, 3 or 4 years during the bull market, and they're not going to be easy. So it's good to know that going forward, and to understand that just because that happens, unless it's for some fundamental reason, that the thesis isn't broken. And when you know that, then you can buy with confidence.
Awesome. So for everyone listening, thank you for joining us today, and hit that like button, subscribe, bell notification. Let us know in the comments if you want to see more regular updates. I personally do vouch for Uranium Insider newsletter. I am a member of it. And, like you clearly stated, there is some incredible opportunities right now. So I encourage you to hit that link in the description or pinned to the top of the comment to check out the Uranium Insider newsletter right there down below. And thank you for joining us today, Justin. And we will be talking again soon.
Let's do it again. Thanks, Jake.